So it is like this. We are only using the divergence and the SMC. So the divergence is only these four: MACD, histogram, RSI, and stochastic, the key ones, and not other insignificant ones. We are not showing the we are showing all the last divergences so that we can go back. uh, we are waiting for confirmation. We are not showing the light divergence lines, and all these we are unchecking for now to go back. So how this is going to work or possible to work is just on around key levels. So for gold, we know that the key levels are 2290, 2300, 2320, and 2340. So these are the key levels we know for gold. So if around these prices we are seeing divergences confirmed, we can the strategy can be done in a way that we can, after the confirmed divergence is confirmed, we can take that trade and set the SL above that bar which created the divergence. And the bar that is creating the divergence cannot be huge bars like these. So this is a huge bar, or like this one. So if the divergence was created in this bar itself, that was not good, that was not okay, but it was created on the next bar. So that's how it works. It's going to work. So as you can see here, it is working. It is close to that 2040 level. So this is before 2340 levels. This is coming from 2339 almost, and then creating the divergence, and then going down around $57 again, around 2320 level. So this is doing the same, and it is holding and then moving around $7. Yeah, it's doing the same for a lot of time. So divergences on bars like this are very good. So narrow bars with very little body are very good for divergences in key areas. So that's something that can be targeted. Now these are all in mid areas, so we cannot take them seriously enough, because this is 23, 28, 23, 27. So these are not good. Again, we are coming to those lower levels. Here we don't get any divergences, so it doesn't matter. Uh, but in this case, we are getting a divergence at 23, 25. We are getting divergence around 23, 25 again. If we go back, we are getting a lot of divergences at that 23, 35 area. Once, twice, thrice, three times we are getting that divergence, and all these times is making $5 7 around that. And these can only be taken in key areas, not like these mid areas. So these do not matter. So generally speaking, because the SMC is not printed in the back, so the SMC is not seen here. But in these cases where we only take trades where there are key order blocks or something like that. So again, 20 to 95, we're getting the divergence. It's moving five, and it's around from close. It's around yeah, $8. That's good. Again, from this is stochastic. It's making a move. Some of it $5 or something, but yeah, then it's checking back again at 2320. MACD divergence, big $15 downside. And if we go back and back and back, it's working like from key levels. It's working almost 60 to 70% of the time, and only these four: MACD histogram, RSI, and stochastic. I am not considering anything other than these. And this is 5 minute chart. It's also working on 15-minute chart, if I can show you. So this is also working on 15-minute charts. As you can see, 15 minute, 23, 24 working, 22 for 25 working, again 23, 25 working. A lot of the time, this is kind of the middle of the range, so it's not cannot take. I was waiting for a divergence here this morning, but we didn't get any on 15 minute. Uh, so this is working. If we go back, to historical price in this range. This worked very well. 23 22 20 88. So this is our key level, key level for entry on the long side, and 23 50 area or around that, that can be short. So this again, it didn't work for some reason, but it's not a big loss either. So we can, even with time, we can create a time stop loss. So let's say we are taking this here, and in time it is not working. So after a few hours we can close it. Again, this is working pretty much, but the first one didn't, second one did. Very good. Like I said, like cross bars, like doji type of bars with a small to no body at all. These are the best divergence bars uh, from key levels. Key level is most important thing here, and 5 and 15 minute both are working. 1 hour is too late. 15 minute is late. Is a little bit late too, but 5 minute can give us a lot of trades each day. uh, and if we can't target $20 on a single trade, but we can target $5 in 4 trades, I believe that's doable. That's much more less risk per trade, and we are actually not investing a large amount of money, uh, but we are investing the money rolling on. So, uh, like trading with the same money time and time again. So I think that can be workable in this style, but this is very much discretional kind of trading. There is very little guidance in it. This is based on only 2 or 3 things, like SMC, AVWAP, key levels, and only divergence on the 5 minute or 15 minute. So that's about it. There is no other guidance. There is no other confirmations. There is no other thing that is needed. If we get, we get. If we don't, we don't. That's pretty much it here. So I don't know what you think about it, but let me know, uh, because in market like yesterday, it worked really well, and in any kind of market, it is giving us an early kind of signal. So the signals are pretty early. So even if they don't work, uh, our risk is pretty much the we know our what our risk is. So our risk is limited to the last closing of that divergence bar, like highest point or lowest point of that divergence bar. So that's our risk, max risk. We're not going to uh, we do not have to look at many other things, waste time or something, and just trade very much non like without emotions at all. Anyway, let me know what do you think. I think this is like a side strategy that can work, but like we discussed, we need to be focusing more on gold and oil and apply it in different ways so that we are catching it one or the either way. Yeah, let me know.